welcome. You're watching our very special Diwali coverage, and this is the Realty Reckoner, your one-stop destination to decode India's property market. From the best performing asset classes and hottest investment corridors to rental yield trends and festive season momentum, we bring you sharp insights, expert voices, and data that matters. Stay with us as we break down where smart money is moving this festive season and what lies ahead of India's real estate in the next Samvat. Now, it's been a stellar year for the real estate industry with robust pricing and demand trends. But like we've been talking about, which cities have seen steady trends in the Samvat gone by, and what's the coming Samvat looking like? What's hot over there? Ashesha is joining us with a Magic Bricks Reckoner right here. Ashesha.
Well, yes, first up, let's take a look at the kind of returns real estate sector has given over the last 1 year. And on an aggregate basis at India level, we have seen returns of nearly 21% over the last 1 year. But as far as city-wise performance is concerned, Pune is at the top of that list, which gave a return of nearly 41%, followed by Mumbai, Greater Noida, New Delhi, anywhere between 12 to 30%. And Hyderabad, meanwhile, is at the bottom of the list, where real estate returns were the lowest at about 10%. Let's also talk about investment type-wise performance of the real estate sector. In fact, over here, multi-story apartment gave a staggering return of 141%, residential house at 46%, builder floor apartment at 43%, and at the bottom of the list here, we have penthouse, which gave just 3% return over the last 1 year. This is as far as the investment type-wise, category-wise performance of real estate sector is concerned. Meanwhile, let's also take a look at rental yields then. Rental yields in Chennai shot up by nearly 36% on a year-on-year basis, stood at about 4.12%. We have Delhi at 23%, Bangalore at 1% at the bottom of the list, where yields stand at just about 3.64%. So that's as far as the rental yield performance is concerned. On an aggregate basis, India gave a 5% uptick as far as rental yields in India are concerned over the last 1 year. Meanwhile, we also have some commentary that has come in from Magic Bricks, where they say that India is poised for moderate demand growth as far as the real estate sector is concerned. Meanwhile, demand is expected to be driven by affordable 1 and 2 BHK units and rising interest in tier 2 cities. So these are the two categories that will grow. End users are expected to drive demand going forward, especially for several cities. Luxury segment will continue to thrive, but at a more measured rate, especially after the post-COVID boom that we have seen over the last few years. Prices are likely to increase at a much lower pace as compared to what we have seen in the last 2 years. That's the commentary that has come in from Magic Bricks. Apart from that, they also say that as far as buying versus renting is concerned, buying can be a smart long-term investment versus renting, which is often better in early stage career, but later on people usually consider real estate as an asset, and hence they prefer buying versus renting. So that's as far as buying versus renting is concerned. It's a common debate in several investment meetings. So yes, so that's the outlook as far as buying versus renting is concerned. Meanwhile, what's hot for the next Samvat? Magic Brick says compact homes will likely drive demand going forward. They also say that several categories are likely to grow going forward. Luxury market is expected to grow at a moderate pace as compared to what we have seen over the last few years. Emerging markets like Greater Noida, Mumbai and Navi Mumbai will witness higher than average price appreciation going forward, which was muted last year, but that is likely to accelerate going forward. Tier 2 markets will become the next hotspot. So that's some commentary that has come in from Magic Bricks, and we also took you through the segment-wise and the category and city-wise performance of the real estate sector that we have seen over the last 1 year.
Okay, Ashesha, thanks so much for taking us through that. So lots to talk about when it comes to the way real estate market has shaped up in the Samvat gone by, from rental yields to the best returns on properties to the most hot markets where we've seen a lot of price appreciation and much more. To discuss that and everything else, let's welcome on board Mr. Ritesh Mehta, the Senior Director of Residential Advisory Services India at JLL, joining us on the show. And Ritesh, hi, thanks so much for your time and this special Diwali coverage edition for us. Ritesh, help us understand somewhat to somewhat what has really stood out to you, and what are some real estate trends you're spotting in terms of price appreciation? What really has stood out?
Thanks, Nee. Good evening. Good evening to everyone. In last 1 year, I think we have seen good demand coming in from few cities, categorized into two buckets. The larger cities, which are NCR, Bangalore, and Mumbai, has done fantastically well, followed by Pune, Hyderabad, and Kolkata. Just to give you a quick background on a YOY numbers in last 9 to 12 months, also although it is showing a slight decline of 12% yearly, but the silver lining is, I would say, quarter on quarter we are growing. The demand is increasing thanks to the reduction in the repo rate, which was 100 beeps, which has led to the reduction in home loan rates. So I think what is fueling demand today is the economic growth, which is leading to high positive sentiments. The second would be, I would say, reduction in the home loan rates, which is driving the demand. And there are certain cities who have done exceptionally well in terms of price hikes, sales activities, and also they have been the demand drivers. So looking forward for the next best year, let's hope. I wouldn't say this year has been bad. It's been slightly plateaued. But I would rather say the last 2-3 years have been exceptional, and this year is not going to be bad either. So times to come, yeah.
Okay, so seems like we have a lot more to watch out for when it comes to this sector. But Ritesh, help us understand, for the benefit of our viewers,
Yeah.
where did property prices rise the fastest in the somewhat gone by?
So obviously the answer is NCR. We
Okay.
saw a great price movement in Gurgaon because of the demand and supply disparity. Demand has been quite robust, and we didn't see that sort of supply in ready to move in categories. So even if you look at from the rental appreciation and the price appreciation capital values, Gurgaon tops the chart, followed by MMR and Bangalore.
Okay, so that's the take on where price appreciation has happened. But Ritesh, imagine if our viewers are looking to invest in real estate property, just for the sake of investment and to look at rental yields, where should they be looking, which cities, which micro markets are looking the best?
So Snehi, there are two schools of thoughts here. There have been a lot of talks on tier 2 cities and satellite cities which are growing. I am a staunch believer of de-urbanization, which is probably, I still feel the metros are not at the saturated levels. There is infrastructure which has gone, which we have seen coming up, unlike the global cities, where you see the towns are settled after towns and infrastructure come both the way parallelly. We have seen in metros in India, we are seeing infrastructure coming in late in last 7-8 years. So I would rather feel, rather than anyone, if anyone has to choose the investment destination, I still feel MMR, Bangalore, Chennai, Hyderabad will give you better returns than the satellite cities. We are just ahead of 7-8 years for the de-urbanization. Currently, there is a lot of migration job opportunities because of the infrastructure growth. And you see a lot of highways coming in, a lot of railways, metros, tunnels are being made in each of the cities. So I would rather say there are more job opportunities in metro cities than the tier 2 cities. So my bet would be still the bigger cities like Bangalore and Hyderabad, or probably the Pune, followed by MMR and Chennai.
Okay, so that's the take on viewers where you should be investing if you're looking to buy a property for the sole purpose of renting it out. And that's the take coming in on which cities, which markets are looking good. And Ritesh still prefers metros. He believes that metros have not yet reached that saturation point. So lots to come ahead when it comes to investment for rental yield in metros, and then eventually the tier 2 cities as well. But Ritesh, talk to us about renting versus paying EMIs for home loans to eventually own the property. Given that our audience, the age bracket is rather young, our viewers, if you're a first time investor, what would you recommend? Would it be go via the rent path, or would it be take on that home loan EMI so that you can pay it off eventually and then eventually have the ownership of your house?
So the nature of jobs has changed, Snehi, now. In last 4 years, we have seen there are more mobile jobs. The youngsters, millennials and Gen Zs are relocating from one city to another. The nature of the jobs have changed. So the stability in terms of location is a question at early ages. If someone is planning to buy a house, my suggestion would be to save money right now. Be on rent for 5-7 years, and once you cross that 33-35 years of age, and when you are actually come to know that this is going to be the city where you are going to spend your retirement for, that's where you should take a plunge and buy something in that city. But till that point of time, I feel for the first 7 years of the career, you should accumulate wealth and you should be on rental and save more money there.
Okay, so rent is the way to go. And
Yeah.
Ritesh, this has been such a large moving debate. This has
Yeah.
been the debate of probably the century, renting versus buying. So, well, we have some clarity over there. Renting is the way to go, at least for the younger generation. That is the word coming in from Ritesh. But Ritesh, going ahead, also help us understand how strong has the demand for both rental demand as well as end users who are looking at ownership of a house. How strong has that demand been this festive season, or let's say this somewhat in terms of Gudi Padwa,
Right.
Dashera, Diwali that's going to come?
Right.
What is your outlook for that, and how do you think that has fared versus the last festive season last year?
I think the sales activities have been almost same with a very slight margin decline of 11 to 12%. Again, repeating one thing that this year has not been bad,
Okay.
but the previous years were really exceptional. So this year is not bad. I still feel that the demand is there and it's going to stay back for next 3-4 years or 5 years. We are in the middle of the cycle of growth. We started this cycle post-COVID at 2021-22 levels. I think we have just crossed 3-4 years. There are another cycle. There is another 4 years to get the cycle back to a different one. So I still feel there is a scope for appreciation. The demand is going to be high, unless there is one word of caution in my mind. There has to be a match of demand and supply. So while we are seeing a lot of supply coming in, those are typically the premium and uber luxury ones. But we have seen in last 3-4 years, the prices have grown by almost, it's been doubled up from 2021 to 25 in most of the cities. So if at all the developers don't make something which is affordable, which are like typical configurations of 1 and 2 bedrooms, and still they remain making, I mean, they continue making 3 and 4 bedrooms, that might be a showstopper probably in coming future. So my honest opinion would be 3 and 4 bedrooms are going to, I mean, the demand will see some sort of decline in coming future because of the high prices and less affordability. But the trend of compact houses or 1 and 2 bedrooms might see again some sort of spike in coming few years.
Okay, so this entire trend of nuclear families, smaller homes, or
Right.
moving away for jobs from your hometown and then living in smaller homes, even on the rental perspective, that is seeing a little bit of an uptick. And that is something my colleague Ashesha was also highlighting earlier, that compact homes are expected to drive the next upsurge that we're seeing in real estate demand. But viewers, on that note, we'll slip into a very short break and keep the discussion going with Ritesh on the other side. Hi there viewers, welcome back to Realty Reckoner, and let's keep the conversation going with Ritesh, who's joined us from JLL today. Ritesh, when you talk about demand and supply, we've spoken about demand so far. What about supply in terms of real estate? Or the first half has been pretty okay. It's not been all that bad, but you've had monsoons that have weighed in. You've still had the GST impact that's coming into play. Policy effect is still coming into play. So do you believe the second half could be the key catalyst period to watch out for launches coming in from real estate developers? Is it looking like a healthy pipeline?
Yeah. So you are right. The first 6 months of the year didn't see good supply because of the policy and the guidelines and the regulation bandwidth. But next 6 months, which is starting January, I would say January to June are going to be high peak season for qualified launches, because there are certain approvals and policies which were into discussions, and those have been now been liberal. So I feel almost it would be the double the numbers what we have seen in last 6 months.
Okay.
You will see good supply. There was always a dearth of supply in last 6-8 months considering the demand. So if you compare YOY Snehi, the supply has been good. If you
Okay.
compare last year and this year, I think we are almost 20 to 22% lower than the last year,
Lower, okay.
and which might get compensated in coming 2 quarters with regulations being freed off.
So scope for this to scale up?
Absolutely, yes.
Okay.
So January to June, as per our view, I think it's going to be a good flood of supply, and buyers will have more choice to pick up the projects and get themselves locked in.
Okay, so slew of supply and launches is what Ritesh is expecting. And in fact, on that note, some time ago we spoke with Mr. Irfan Razak, the chairman and managing director of Prestige Group, and he also happened to mention a slew of launches that will happen in the next quarter or in the second half. In fact, listen into what he had to say.
In fact, our next launch is in Mumbai, which is the Garden Trails in Thaisar, Mira Road, which is, I think we should get ready for that. Bangalore also, we have got a big launch called the Evergreen Prestige Raintree Park, followed by many others. So, and of course, Hyderabad, by the end of the quarter, we'll have the Golden Grove. Again, that's a pretty large and big development. Plotting development, whatever we are doing, it's basically happening in Bangalore at the moment. Yeah, we are looking at something in Hyderabad and subsequently in Chennai. But Bangalore, I believe that these three projects that which we launched in the last quarter, which is the Prestige Autumn Leaves and then the Prestige Greenbrook and of course the Crystal Lawns. All these three met with a very good response. People are very keen to buy plots and then build independent homes. And that's a new trend that has been there for the last couple of years or maybe 3-4 years.
Okay, that's the word coming in from Mr. Irfan Razak of Prestige Group, who believes that the second half looks very healthy in terms of his launch pipeline. But Ritesh, let's talk about some key trends that you have been observing and how you plan or how you see them to play out in the years to come as well. Let's talk about the near future, maybe
Sure.
1 to somewhat ahead. What are some key trends that you are hoping to see in the real estate segment?
So three things, Sneh, to sum up. The one would be the prices and the sales uptake might slightly say flattened up, or maybe it might remain stagnant for 18 months. The second main trend which probably we need to look at is, unlike pre-COVID days where every city had handful developers, today there are intercity developers. One developer is coming into another city and another moving from one city to different cities. So there is healthy competition in terms of product being designed. The next 18 months would be not much of sales, but it would be more of design, product and execution. So what really will matter today or coming 18 months or 24 months is what is the differentiator in the product, what the credibility of the developer is vis-a-vis early days we used to only look at location and the price. So those are not going to be any more differentiators, but I think the product will speak for itself. And the last thing, what we feel in coming 18 to 24 months would be the demand from first home buyers would be more because of growing infra. People will be mobile. There would be a lot of migration which got stuck during COVID times, but now it's opened up. The markets are good. Job opportunities are there. People will be mobile and they would want to buy entry-level homes. So entry-level homes like 1 and 2 bedrooms would dominate the supply and the sales side more than the most premium or the uber luxury ones.
Okay, so sounding good. Ritesh, as we wind down our conversation, let's knock up the pace a little bit and let's do a little rapid fire.
Sure.
And so for this segment, I just want some very candid, very key answers from you. Let's start by talking about your take on the real estate demand that we're seeing in the market in one word.
On fire?
On fire? You
Yeah.
believe the real estate demand is on
Yes.
fire? Okay,
Yes.
sounding optimistic. Your dream city where you would love to own a house?
Chandigarh.
Chandigarh. Okay, any reason why Chandigarh? What stands out?
Lot of greenery around, no
Something you
traffic,
don't see
less
here in
polluted.
Mumbai. Okay.
That's the reason.
Okay, next up, city with the best rental yields where our investors should be investing. And
Obviously, Mumbai.
Mumbai?
Absolutely.
That run up, you believe, in terms of
That
price
will continue.
appreciation
That will
continues.
continue. That will.
Okay, that's good. A feature that your dream house will have or should have?
I like large decks and balconies.
Balconies.
Yes.
A rare sighting in Mumbai.
Yes.
At least in South Bombay, but yes.
Yes.
Balcony is something, okay, aspirational at best. But also talk to us about the next big city in this real estate trend, the city that
That's
could
a
see the
good
next
one.
big boom.
Ahmedabad.
Ahmedabad.
Yes.
Okay, so it's really these tier 2 cities, but even the higher end of the tier 2 cities that
Exactly.
could do well.
Yes.
Okay, so Ahmedabad, and one real estate myth that you would want to debunk for our viewers, a common misconception, a stereotype that they could have.
Prices are high.
But prices are always high.
That's the myth, I would say.
Okay, so that's the myth, and we'll wait and find out what the
I
reality
still feel there
is.
is a headroom for price growth. As I
Okay.
mentioned that the infra is yet to come. We have just seen 50-60%.
Okay.
But another 40% is yet to come.
Okay, and if you had to describe in one word, where do you think we are in the real estate cycle now, given the swing we've seen from COVID? Do you believe it's still early days? Do you believe we're in the middle, or do you believe that now it's time to simmer down a little?
No, we are in the middle of the cycle.
Okay, so 3-4 years more left till
4
we start
years.
seeing?
4 years, yes.
Okay, so that sounds good. And lastly, one word to describe the future of real estate in India.
Evolvement. I mean, we are evolving.
Evolving?
Yes.
Okay,
We
so
are
that
ever
sounds
evolving.
good.
There are a lot of asset class within real estate which are evolving, like alternative asset class, co-living, co-working. So real estate is no more only residential, commercial and retail,
Sure.
but there are many aspects to it right now.
Okay, and with this entire H-1B issue that we've seen in the US, GCC demand has shot up. So like you were saying, it's commercial, retail, all of that is doing very well. But while we're talking about residential, very quickly as we wind down, the best investment form or format of real estate, could it be plots, could it be unfurnished homes, ready to move into homes, or ready homes?
So there are two answers. I mean, I would divide this question into two categories. If the quantum is less or it's a first time investment, I would rather, and it's a long term investment, then people can prefer land or plots.
Okay.
Probably in a tier 2 city or something which is on the periphery of the main city.
Okay.
If the quantum is high and you really want rental yields with capital appreciation, I would say residential real estate, luxury real estate, and pre-leased commercial properties.
Okay, so that's the take coming in on where you should be making your money, if at all you're looking to make money in real estate. But viewers, with that, we completely timed out on this special edition of the Diwali Realty Reckoner. Thanks so much for tuning in.
Thank you.